Hey everyone, welcome to the seventh edition of Economy Markets and Macro. This is a weekly podcast that I do on every Saturday where I discuss anything interesting that is going on in all those three sections, that is economy, markets, and macro, that I'm reading around or something that comes across my news feed, etc. So this can be short or a long podcast depending on the amount of news that I'm reading or something that comes across, obviously. And also, this is just something trial that I'm doing, so don't expect that I will continue this forever. I'm just going to try it for a couple of months and see if I can continue. And yeah, hopefully I enjoy it and I can continue it and how much response I get. Saying that, let's just start right away. We don't have much to discuss today. The week was relatively quiet, even though there were a couple of good news, but the week was relatively quiet. So we are gonna start right away. So I'm gonna go and do a little bit different this week. I'm gonna also discuss a couple of things around markets and then go into any news as such. So yeah, nevertheless, let's just start and we will dive right into it. So hold on a sec. Let me just share my screen with you all. And here we go. So yeah, markets have been not great in the last week, international as well as Indian markets. So as you can see, Nifty, so the red line is 50-day moving average, while the blue line is 200-day moving average. So it seems like Nifty has been not great. Nifty has gone again below its 50-day moving average. The all-time high was made around 27th of September 2024, and we are far away from that. So at 26 to 84 around was the all-time high, and we are at 24,565. Doesn't seem good. We came down quite a bit, went to 21,800, recovered quite a bit of it, went to 25,700 almost, and then are down again to 24,500 now. Weakness is definitely there. USD INR is bad. So a lot of things. Earnings are not as great. P/E ratio is very high. So overall, doesn't look really great for the markets. Uh, I think this whole nature of the markets is going to continue more like the sideways market. So it's going to be like a good amount of fall. Then the markets will recover a bit. Saying that okay, maybe it's a recovery in process and again go and fall back again. So that's what I think will happen over the course of next year as well. So that's what I hope. Like I see a sideways market for a couple of years from this top. So I expect markets to be sideways until like when September 26, maybe a little bit less or more, but around that part of time. Like I'm not saying we will not break all-time highs. We might go, again go up and break all-time highs a little bit and then again come back. I think that's what the nature is going to be, rather than a steep rally like what we saw in 23 or 24 kind of thing. That's what I think is going to happen. I mean, because the reason I think like that is the P is extremely high for Indian markets. It's above average. I wouldn't say extremely high, but above average relatively. And there are two ways a P gets re-rated. One is markets fall a lot, or they just and remain by after falling remain there for a couple of years or more. Or the second option is we go into a sideways phase, like a correction, like a small correction, recovery, but not really, rallying a lot in either direction. So I think that's what the phase of the market that we are going to be in for the foreseeable future. So yeah, I hope we recover. I'm wrong and we actually rally a lot, but I don't see like after really good 4 years, I don't see a big rally starting off right away. Gold, in at least in USD terms, is sideways for the past 4 months now. Again, I don't have any view as such. I think it's going to take some time for it to, find its direction. It also rallied a lot recently, so I don't expect it to rally again quickly, but let's see. USD INR had some pressure like in the last week. Like overall, after 15, 16 July, we had a big rally in USD INR on the downside. Downside as in it weakened, so it went almost at the high of 87.8, 88 kind of thing. And now in the last couple of days, it recovered a bit. Mostly this is because of RBI selling dollars, and RBI must be a seller of dollars, which would have assisted like rupee not falling a lot. But I think we should see 19 in few months, weeks, maybe this year, hopefully. I think, but I think 90 and eventually 95 is on the cards. The only reason being we are a very import-driven country for most of our petrol and everything. And with tariffs and a lot of other uncertainty, I think so that our USD INR is gonna weaken a little bit more. I don't see it strengthening a lot. S&P had a bad day on Thursday and Friday, as you can see here. Friday was really bad. It was so this is S&P and USD INR. So if we actually look at the SPX index, which is the USD index, so Friday it closed down 1.6%, and Nasdaq 100 closed down like 1.96%, so 2% fall almost. And that is also expected because it was like a one-way rally from bottom made in April, around 9th of April or something like that. From then, it has been like one singular way rally up above. And so we should expect like a slap on the wrist kind of a thing here. So I don't see anything otherwise. It's a good thing that markets don't rally one way and just go keep on going up and up. And that it so I think this will go below 50-day MA quickly, and then probably like maybe touch 200 MA. I don't know. Blue line is 200-day MA. There is a possibility that it may go and touch 200-day MA, but I don't know. But I definitely think it should touch 50-day MA, like cross below it, hopefully. Let's see. Either way, this was regarding markets. A couple of small things. BTC, very much correlated to Nasdaq or tech stocks in general, went down in the last couple of days. A little bit of recovery over the weekend. So maybe market recovers, Nasdaq recovers on Monday. We don't know. Let's see. DXY has been also like going up above 50-day moving average. On Friday, the DXY fell, weakening weakening USD thereby, but still above 50 days. So let's see what happens. DXY has been weakening from February. It has never been above 50-day moving average until recently, like a few days back in the last week. But from Feb 2025, it has always been below 50-day moving average. So I think it will either go into like a sideways phase or like a rally upwards. We don't know. I'm expecting this kind of a phase, as you can see here. This kind of a sideways phase is what I'm expecting in USD, DXY, thereby into USD as well. But let's see. That's enough for the markets. Now, going back to some news. So, one of the things that I was reading is this: Google to invest $6 billion in 1 gigawatt data center project in Andhra Pradesh. This is a good thing. A lot of data infrastructure is also coming towards India, which is a good thing. So, just to put this in context a little bit, so all of these big tech companies which are doing, whole infrastructure investment for AI. So mainly the AI investments is being led by Microsoft, Meta, Google, mostly. Amazon a bit, but mostly by Alphabet, Alphabet slash Google, Meta, which is Facebook, and Microsoft. So all of these are doing almost like $100 billion quarterly investment. Just imagine $100 billion of quarterly investments for AI, and most of it is going into data centers. So the way investment data centers work is like whenever you type a query for AI, like in Perplexity, Claude, or Gemini, or whatever AI tool you're using, whenever you type a query, it has do and do a bunch of stuff, right? And that's one type of power that they need to to run a bunch of queries. And before that, they have to train the AI on the data. So that's where the compute power is needed, right? So these two things come together, and they require a lot of power to do all these things. It's very power heavy. So for that, they need these data centers which can process all of these things. They need the latest NVIDIA chips which can actually process all this compute to answer your questions, our questions, queries, etc. And they also need power from, and how do they do this is through data centers. So yeah, I mean, these companies, if they want to keep on handling this ever growing need for AI queries, they have to invest in this data center. There is no other option. Or they can be like Apple. Like Apple is not at all interested in AI. They are just sitting outside. So you can be Apple and not invest in anything, or you can be either Microsoft, Meta, or Alphabet and invest in all these things so that you can capture the AI crowd. So right now they're not making any profit. All the good things that they're doing is only investing in all these massive infrastructure, and hopefully turn a profit in the future. Now, how this is going to turn out, we don't know. But I hope some of this, like they are doing $100 billion quarterly. So just imagine, just to put in perspective, there are only a handful, like 4 or 5 companies in India whose market cap is $100 billion. Okay, greater than $100 billion. I'm not even talking about revenues. I'm talking about market cap. I don't think there is any company in India whose revenue is $100 billion. Like $100 billion roughly is around eight. 8.5 lakh crores rupees, right? So I don't think there is any company in India who has that kind of a revenue. And yeah, what I'm trying to say here is, just imagine, and this is their quarterly investment. I'm not even talking about annual. They're investing $100 billion quarterly. So that's investment. That's not even their market cap. So just imagine how much money is being poured into this AI infrastructure, the scale of it. So yeah, and Microsoft, like last week in this podcast, we discussed, I think, Nvidia reaching $4 trillion, and this week Microsoft reached $4 trillion market cap. So two companies in US have reached $4 trillion market cap. Our whole stock market is also not even $4 trillion, if I'm correct, or a little bit above that, I think. And just two stocks in the US are $4 trillion. So yeah, they can do these kind of investments, obviously. So yeah, hopefully this pans out for good, and let's see what happens. Another interesting chart that I came across is this. I don't remember where I came across. I'm sorry for the source, but I think it is from Data Drake Research, if I'm correct. But anyway, the chart is basically these two lines, blue and orange. So blue line is the Nasdaq 100 index, Nasdaq Composite Index in from 1995 to 2000, like when it made the top. The blue line represents that, and the orange line is the current Nasdaq rally from 2022, so 28 12 22 when the bottom happened. And this is like perfectly following. Obviously it's not following it day by day, but more or less it is following, and this is a true chart comparison. This is not a chart crying. This is all indexed to 100, so percentage wise. So that's why, as you can see, it is pretty much following current Nasdaq is rally is pretty much following the Nasdaq rally of the 2000 bull market. And if we believe, again, nothing happens ditto in the market, like nothing ever happens in the market as similar as it happens in the past. But if you are considering this is a guide, there is still a long way to go for this rally. Like if you see, the rally is at 200-ish points, and the top was made at near 275, 300, right? So we still have legs on this market, a couple of years at least away. Either way, we shouldn't take this as a gospel, that this is how it's gonna pan out this time as well. But it was just really interesting to see this kind nature of the Nasdaq, like kind of mirroring what happened in 2000. I don't expect it to, do exactly what it did during the 2000 .com crash, but we never know. Again, don't expect things to pan out as equally as what happened there. So just something that I was curious and wanted to share with you. And the last thing is obviously the big news of this week: Trump to hit India with 25% tariff, but penalty plus penalty for our trade with Russia for importing oil and stuff like that, right? Now, it's really interesting to see this. Obviously, I don't think this is going to have a big effect on India because our goods export to US is not that great. Obviously, there are few industries like garment industries, more textile industries, so to say, fisheries, and a couple of other industries which export a lot of goods, mostly around textiles, but raw textiles as well as branded textiles, which ship to US, along with a lot of iPhones and Apple manufacturing shifting to India. Those goods are also being exported to US from India. Apple almost exports everything from India to US, at least for its iPhones, I think. Either way, I don't still think that we have a lot of goods being exported to US. There are a few industries which are, very much exposed, like pharma, etc. But I don't think this will pan out a lot. I think we are going to surely make a trade deal in some way by the end of August, hopefully. More of our exports are on service side as well, so I don't really worry that much. There will be some pullback. There will be some extreme reaction in for the foreseeable future if you don't, crack a trade deal or this remains. But eventually, everything will get normalized. Prices will increase. Our Indian government will probably give some sops to, deal with this 25% tariff and all those things. And I think things will be fine eventually. I don't think this is a big deal in the long term. Short term, yes, things might not be that great. There might be pressure on USD INR because if we stop importing Russian oil, then we'll have to pay more for the Middle Eastern oil and other oil that we need to import, and that can create pressure on dollar reserves as well as the dollar demand. And also, RBI might have to, sell dollars to stabilize the currency to make sure that our imports are not going out of the way, and also that, keeping USD INR in check. But eventually, I think USD INR is going to go above 90, and it's going to stay there. But either way, I don't think this is going to be a big deal in the long term. The problem in the short term, as I said, is this textile industry more so because they deal with very low margin as low as 5 to 7%. So it's going to be very tough for them to get okay with this tariffs. They have to increase prices a lot for their American goods, and then if that happens, then there is a lot of competition from Vietnam, Cambodia, and other places, Bangladesh, etc., who have lesser tariffs than us. So it's interesting to see how this pans out, but let's see, and hopefully this doesn't go into a big blow for us. That's it for today. Thank you for joining. It was really wonderful to talk with you all. Again, if you like this podcast, please share, subscribe, and comment for any feedback. Thank you so much.